Good morning, traders, and welcome to BCR's morning market analysis. First up, let's have a look at the US dollar. The DXY held near 99.35 after touching a 3-week low, as weak US manufacturing data strengthened expectations for a rate cut next week. The ISM manufacturing PMI showed the ninth straight month of contraction, the fastest pace in 4 months. Which has pushed rate cut probabilities to 88%. Markets are also watching political developments after President Trump signaled he has selected the next Fed chair, which is Kevin Hassett. Reportedly, who is going to be the leading candidate for this role. Traders now await comments from Fed Chair Powell for further policy guidance. Technically, the dollar rebounded strongly from 99, forming a bullish hammer, which casts doubt on the sustainability of the recent bearish breakout. Resistance sits around the 200-day moving average at 99.6, with a potential move towards 100 and 100.25 if momentum continues. Initially, support sits at the 50-day moving average around 99.1 and the psychological level of 99. Next up, let's have a look at crude oil, which is trading around 58.6, supported by fresh supply side risks following a Ukrainian drone strike on Russian infrastructure and renewed uncertainty in Venezuela by the US. Recent geopolitical tensions have made the market highly sensitive to any threat of Russian output disruption. Despite 4 consecutive months of declines in global crude benchmarks, supply side variables, including OPEC Plus maintaining current production levels and partial loading disruptions on the Black Sea CPC pipeline, are really helping stabilize crude prices. Technically, WTI has formed a steady rebound structure, holding above support at 57.59 and 58, with bullish momentum strengthening as the MACD forms a low-level golden cross. If support holds, prices may look to retest the $60 psychological level and the 90-day moving average around 61.54. Next up, let's have a look at our favorite gold, which pulled back to 41.64 after Monday's 6-week high as traders booked profits ahead of the Fed's decision next week. Expectations of a December rate cut remain the key driver for gold, with markets pricing in an 88% probability of a rate cut. Year to date, gold has climbed nearly 60%, supported by strong central bank buying, ETF inflows, ongoing geopolitical tensions, and persistent demand for safe haven assets. The weaker dollar, now at a 2-week low, has also really supported buying interest. On the 4-hour chart, gold has broken out of a symmetrical triangle pattern, indicating trend continuation. Though the RSI near 65 has slowed immediate follow through, resistance remains around the 4250, 4275 level, with a breakout opening the path towards 4300 and the historical high of 4381. Initial support sits around 4187 and the psychological level of 4150. Lastly, let's have a look at the Australian dollar, which consolidated near 65.60 after touching a 2-week high, which was supported by strong local data and rising speculation of a future RBA rate hike. Manufacturing PMI climbed to a 3-week month high, while job ads fell at a slower pace, suggesting modest improvements in the labor conditions. Last week's monthly inflation release also came in hotter than expected, keeping price pressures elevated. Markets are now watching this week's Q3 GDP data, with strong growth potential reinforcing expectations of a 2026 rate increase. Externally, the AUD continues to benefit from a softer US dollar as traders price in a 90% probability of a Fed rate cut next week. Technically, the Australian dollar is holding above the 20-day moving average at 6507 and has broken its downtrend from the September peak. Momentum is improving, favoring an advance towards the psychological level of 66 and potentially 66.60, 66.65 if strength continues. Key supports remains around 65.07 and the psychological level of 65 cents, with the 200-day moving average around the 64.65 level, acting as deeper support. Well, that's all for today's morning market analysis. Thank you for tuning in. And as always, manage your risk and happy trading.